Market Master today, we have, Alok Agarwal, Head of Quant and Fund Manager at Alchemy, who joins us. Hi, Alok. Good afternoon and good to see you in. Thanks a lot for joining in. Well, I wanted your comment first on this. Yesterday we had Bhavesh of Ola, and he sounded very, very aggressive with regard to gaining market share, improving margins as well. How are you all seeing this EV theme? Will you all go with the larger players, who already have a strong base, and now they're getting into the EV, or are you looking at the core EV players, namely Ola and the likes?
One thing is sure for Nigel, that EVs are here to stay. They will be, the ride across will be seen. The government is supportive of that. There have been a lot of schemes around supporting it. For the companies which already have a lot of cash flows coming in from the ICE vehicles, they need to obviously crack their minds as to how to ensure that they gain market share on the EV side as well. Meanwhile, as you mentioned, some of them are already taking long strides and ensuring that they capture the market at the initial stage itself. So as we see, this is an evolving stage, but the growth going forward over the next 5-7 years is definitely in favor of EVs.
Okay, so EV is one space that you'd look at favorably. What about Alok? Hi, good afternoon. Good to have you on. What is the stance you're taking on the rest of the auto space overall? Because, we were just discussing this earlier as well. Numbers have started getting a little muted for passenger vehicles. CVs are failing to show up in, excitement. It's just the two-wheeler sales which are holding up well. Do you think this is only a temporary patch and therefore one should be buying any dip in these stocks? Or do you think this is a slightly longer, maybe cyclical downside period that we're getting in?
So, Surbhi, if you look at the last couple of years, we had a great time for the auto sector, both on the two-wheelers as well as on the four-wheelers front. But right now, if you look at the overall inventory levels also, they are also at a multi-year highs, almost all-time highs, in terms of the number of days of inventories that we have. So there could be some consolidation, there could be some kind of slowdown in the profits in the near term. But going forward, it is one of the key discretionary spend items for Indians. And yes, we have to be picky and choosy around which areas that we look at. As we said, that those which are being able to generate higher volumes, gaining market share in these kind of markets, and that profitably, that's the area that we are looking at.
Okay, so that's the word on the auto space. Alok, what else? What else are you changing in the portfolio at all? And what are the top overweights or the biggest bets for you at this point in time?
Frankly, we are more overweight on the domestic cyclical side, although yes, some of them are facing some correction of late in the last few weeks or something. But after a big run that we have seen in some of them in the last 12-18 months, some bit of consolidation after that cannot be ruled out. But our starting point for narrowing down on stocks and sectors is the growth, the heightened growth, and the certainty of that. And we see that part coming primarily from the capex-oriented names, the cyclicals, and the discretionary side. So that's the area that we are looking at. We are more favorably adding weights in those kind of sectors. And the others which are possibly not growing at a faster pace, or possibly were growing faster in historical times, but going forward doesn't look like growing at a great pace, they are the ones we are underweight on.
Alok, if I'm not mistaken, I think you'll have Trent in your list, right?
Yeah.
Congratulations. I guess you all got in early out there. But what's the view right now? One would say it's gone out of whack, but one would say it went out of whack at 4,500, at 5,500, and even at 6,500. But it just continues to move northward, and now it's got that tailwind that is coming in the Nifty. So funds will have to allocate purely because they want to replicate the Nifty. Your view on this one? It's been a big winner. Due disclosures are taken on board, but tell us.
Yeah, precisely, Nigel. This has been a big winner for us. And, aside the valuations, nothing else is wrong in this one. So they have executed extremely well, both on the growth front, the way their studios have done well, way their websites have come back. The profits have multiplied nearly 15 times in the last 3 years. Valuations definitely on a higher side. It was expensive a year ago. It is expensive now. But one of those rare retail companies that have really cracked the markets properly. They have grown both in volumes as well as on margins. and gaining market share. You don't often see companies and stores having queues outside their stores and without having much presence online. So they have done something really right. And we, as we said, our stock picking, our allocations are more based on companies that are executing well. They are having higher growth, and not just higher growth, the visibility of growth going forward is good because of the kind of strategic decisions they have taken. Capital allocation remains good. So those aspects have been pretty good for us. It is still a part of the portfolio, and some few of the portfolio is actually one of the top holdings.
Okay, all right, Alok, appreciate you stopping by and filling us in with your views. We look forward to chatting up with you quite a few times. I was looking through your list and quite a few winners in there: HAL, Trent, REC. Thanks a lot for joining in. Wishing you a good evening and a good weekend ahead as well.